there, and welcome to the Property Wealth Podcast. We're so glad you're joining us today.
Yeah, it's great to have you here. We're diving into a really interesting topic today, one that could open up some new avenues for you in real estate.
Absolutely. We're talking about ground lease investing and how it can be a fantastic, passive, long-term strategy for building wealth.
Right, and many people might not even be familiar with ground leases, so we'll break it down and explain how they work and why they can be a smart choice, especially for folks looking to invest later in life.
Exactly. We'll also touch on the benefits of this type of investment, how it compares to traditional real estate investing, and some real-life examples to make it relatable.
Plus, we'll share some tips on what to look for when considering a ground lease and things to watch out for, as well.
Yeah. And by the end, we hope you'll feel a lot more confident about whether ground lease investing is right for you.
So let's get into it.
Right after this.
So, Sarah, when we talk about ground lease investing, it's really about looking at the big picture, especially for those of us over 40.
Absolutely, Mike. I mean, many of our listeners are thinking about retirement timelines, right? It feels like a crucial time to start making those long-term, secure investments.
Exactly. And with ground leases, you're essentially securing a stable income stream without the heavy lifting that comes with traditional property management. It's like, a hands-off approach to investing that can really fit into a busy lifestyle.
Right. And with inflation being such a concern these days, having that consistent cash flow can really help cushion against rising costs. I mean, rents are going up, but with a ground lease, you're often locked into those terms.
Yeah, that's a good point. And think about it. If you've got a solid ground lease, you can adjust the lease terms over time to account for inflation. It's a way to ensure that your income keeps pace with the market, which can be really reassuring as you approach retirement.
Exactly. And I remember chatting with a listener, let's call him Dave. He was in his early 50s and had been thinking about diversifying his portfolio. He didn't want to deal with the headaches of managing multiple properties, so ground leases became a really appealing option for him.
Yeah, that's a great example. Dave's situation is pretty common. Many folks in their 40s and 50s are realizing that they want to simplify their lives while still building wealth. Ground leases allow you to do just that, without the constant worry of maintenance or tenant issues.
And let's not forget about the emotional side of financial security. I mean, when you have that steady income coming in, it just feels, less stressful.
Oh, for sure. It's like a safety net. You want to feel secure as you move into retirement, and knowing you have that passive income can really give you peace of mind.
Exactly. Plus, with the current economic trends, who knows what the market will look like in the next 5 to 10 years? We've seen shifts in real estate, right?
Absolutely. The market's always changing, and ground leases provide a buffer against volatility. They can be a stable investment even when other parts of the market are fluctuating. I mean, think about it. You're not tied to the property itself, just the land.
Yeah, and that means you're less affected by market downturns. The land retains its value. And if you have a good tenant, your income stream can remain stable.
Right, and let's not overlook the wealth transfer aspect. Many people in this age group are starting to think about how to pass on their assets to their children or family. Ground leases can be a great way to create a lasting legacy.
Definitely. And these leases can be structured in such a way that they can be easily transferred. It makes it simpler for the next generation to manage, without a ton of complications.
Exactly. I've seen families benefit from that. They end up with a steady income that can support them, or even fund education for grandchildren. It's a thoughtful way to ensure that you're not just building wealth for yourself, but for your loved ones as well.
And that's something that really resonates with our listeners. Building that sense of security, not just for themselves, but for their families, too.
For sure. And let's talk about market shifts. With the rise of remote work, people are reevaluating where they want to live. This could mean that some areas that were previously overlooked are now becoming desirable. Ground leases can capitalize on those changes.
Absolutely. I mean, think about a ground lease in a developing area. If that area starts to boom, you could see significant appreciation in value.
Right. And the best part is, you're not the one taking on the risk of development. You're allowing someone else to do that while you reap the benefits. It's a win-win.
Yeah, and I think it's important for our listeners to recognize that this isn't just about numbers, it's about lifestyle too. If you can invest in a way that allows you to enjoy life more, that's incredibly valuable.
Definitely. It's about finding that balance between wealth building and living well. We've talked about Dave, but I also remember another listener, Laura, who was able to travel more because she invested in ground leases.
That's a great example. She didn't have to worry about property management while she was off exploring.
Exactly! She was earning income while enjoying her life. And that's a key takeaway here. It's not just about how much money you can make, but also about how you can use that money to enhance your quality of life.
Yes! And it really does come down to the freedom that financial security brings.
Right. So as we transition into discussing some core strategies for ground lease investing, I think it's important for everyone to keep in mind how these investments can align with their personal goals.
Absolutely. Let's dive into those strategies.
So let's dive into some core strategies for ground lease investing. One of the first things to consider is the 1% rule.
Right, the 1% rule. Can you break that down a bit for our listeners?
Sure. The 1% rule suggests that ideally the monthly rent you receive from a property should be at least 1% of the total purchase price. So if you're buying a ground lease for, let's say, $200,000, you'd want to be looking for at least $2,000 a month in rent.
That makes sense. So if you're not hitting that 1% mark, it could be a red flag.
Exactly. It's a quick way to gauge whether a deal is worth pursuing. And remember, this rule isn't set in stone, but it gives you a good starting point.
Got it. And what about the 50% rule? I've heard about that too.
Oh, the 50% rule is another handy guideline. It suggests that, on average, about 50% of your rental income will go toward operating expenses. So if you're expecting to make, say, $4,000 a month in rent, you should plan for around $2,000 in expenses.
That's useful. So if you're not accounting for those expenses, you could be in for a surprise, right?
Absolutely. It's crucial to factor in those costs, especially for ground leases where the landowner often has ongoing responsibilities like maintenance and property taxes.
Speaking of which, what kind of properties are typically involved in ground leases?
Great question. Ground leases often involve commercial properties, like fast food restaurants or banks, but you also see them in multifamily housing or retail spaces.
So it's not just limited to one type of property. That's good to know.
Right. And when you're evaluating these properties, you should have a checklist. Things like location, the creditworthiness of the tenant, and the lease terms should all be on your radar.
What do you mean by the creditworthiness of the tenant?
Well, you want to ensure that the tenant is financially stable. If they're a big franchise, like a well-known coffee chain, that's usually a good sign. It means they're likely to be reliable when it comes to paying rent.
Makes sense. And what about lease terms? What should we look for there?
Look for lease terms that are favorable to you as the investor. Ideally, you want long-term leases, maybe 20 to 99 years. This way, you can enjoy a stable income stream.
And it's important to pay attention to renewal options too, right?
Exactly. Renewal options can significantly impact your investment. You want to ensure that the tenant has the option to renew, but that it's also beneficial for you. Sometimes, there are predetermined rent increases which can protect you against inflation.
So it's a balance, really.
Definitely. And while we're talking about long-term plays, let's touch on cap rates. They're a big deal in real estate investing.
Yeah, I've heard of cap rates. Can you explain how they apply to ground leases?
Sure. The cap rate, or capitalization rate, is calculated by taking the property's net operating income and dividing it by the property's purchase price. So, if your ground lease generates $24,000 a year in net income and you bought it for $300,000, your cap rate would be 8%.
So higher cap rates usually indicate higher risk, right?
That's right. A higher cap rate might mean the property is in a less desirable location or has a less stable tenant. Conversely, a lower cap rate often indicates a more stable investment.
It's all about finding that balance again.
Exactly. And don't forget about financing options. You can use traditional mortgages, but for ground leases, you might also consider commercial loans. These can have different terms and interest rates.
So there are a few paths to consider.
For sure. And it's important to shop around for the best rates. Sometimes local banks or credit unions can offer better deals than larger institutions.
That's a good tip.
And another thing to keep in mind is the importance of market research. You really want to understand the market trends in the area where you're investing.
Right, what kind of trends should we be looking at?
Look for indicators like population growth, employment rates, and even local development projects. If a new shopping center is coming in, that could boost demand for your property.
So, being proactive about research can lead to better investment decisions.
Absolutely. And don't forget to network with other investors. They can offer valuable insights and even partner opportunities.
That's so true. It's all about building those relationships.
Exactly. Now, before we transition into common pitfalls, let's quickly summarize some of these strategies. The 1% rule, the 50% rule, understanding cap rates and lease terms, and keeping an eye on tenant creditworthiness.
And don't forget about market research and financing options.
Right? All these elements work together to help you make informed decisions.
It's a lot to think about, but it sounds manageable with a solid plan.
It definitely is. And now, let's talk about some common pitfalls investors might encounter when diving into ground lease investing. So, Sarah, when it comes to ground lease investing, one of the biggest pitfalls I see is over-leveraging. A lot of investors think they can just max out their financing, and everything will work out perfectly.
Yeah, that makes sense. It's easy to get caught up in the excitement of a deal and think, why not go for it all? But what happens when the market shifts or, unexpected expenses pop up?
Exactly. I had a client once who bought a prime piece of land with a ground lease, thinking the returns would be guaranteed. They took on a lot of debt to secure it. But then, sure enough, the tenants struggled to pay rent. And suddenly, they were in a tight spot.
Ouch! That's tough. So it's not just about the potential for income, but also ensuring you're not stretching yourself too thin financially, right?
Right. And it's crucial to have a solid cash flow analysis before diving in. You really want to know your numbers inside and out. If you're counting on rental income to cover your mortgage and that income disappears, well, you're left holding the bag.
Yeah, I can see how ignoring cash flow could lead to a disaster. What about tenants? I imagine they can make or break your investment too.
Absolutely. Bad tenants can be a nightmare. I've had investors who, didn't do their due diligence and ended up with tenants who were late on payments or, worse, damaging the property.
So what's the key to avoiding that situation?
Well, it comes down to thorough screening. Check references, look into their rental history, and trust your instincts. If something feels off, it probably is.
That's really solid advice. I think a lot of people underestimate the importance of vetting tenants.
Yes, and another thing I see often is the tendency to ignore hidden costs. Investors get so focused on the purchase price and potential income that they overlook things like maintenance, property taxes, or even legal fees related to the lease.
Right. Those can add up quickly. Do you have any examples of that?
Sure. I once worked with someone who bought a ground lease thinking the numbers were amazing, but they hadn't factored in the maintenance costs for the property. They ended up spending way more than they anticipated, which cut into their profits significantly.
Wow. That sounds frustrating. So it's all about doing your homework ahead of time.
Exactly. And let's not forget about timing the market. It's tempting to think you can buy low and sell high, but that's a risky game.
Yeah, I mean, nobody has a crystal ball.
Right. I knew an investor who waited for the perfect moment to buy, and guess what? The perfect moment never came. Prices kept climbing, and they ended up missing out on a great opportunity.
So what should someone do instead? How can they navigate that?
Well, you need to focus on the long-term value of the investment, rather than trying to time the market. Look at the fundamentals of the property, its potential, and the demand in that area.
Wise words. And I imagine it's also important to keep an eye out for red flags during the whole process, right?
Absolutely. One major red flag is if the property has been sitting on the market for too long. You might want to ask why, or if the numbers just don't add up.
Yeah, that could be a sign that something's off.
And also, be cautious if the seller is desperate to sell. It could indicate underlying issues.
That's a great point. I think people sometimes overlook that, thinking they're just getting a good deal.
Exactly. It's like that saying, if it seems too good to be true, it probably is.
So what's the takeaway here for our listeners?
I think the biggest takeaway is to be diligent, do your research, and don't rush into decisions. Real estate is a long-term game, And the more informed you are, the better your chances of success.
And if someone finds themselves in a tough spot, like over-leveraged or dealing with bad tenants, how can they recover?
Well, first, they need to assess their situation and consider their options. Refinancing could be one way to manage over-leverage, or, in some cases, selling the property might be the best choice.
That makes sense. And for issues with tenants?
Communication is key. Sometimes, a simple conversation can resolve issues, but if things escalate, you might need to look into eviction processes, which can be a whole other challenge.
Yikes! But I guess that's why it's so important to screen tenants thoroughly from the beginning.
Exactly. And if you're proactive, you can often avoid those issues altogether.
So it really comes down to being informed and making smart decisions from the get-go.
Yes, and always being prepared for the unexpected.
That's a solid plan. Thanks for sharing these insights, Mike.
My pleasure, Sarah.
All right, so what's next for our listeners as they consider diving into ground lease investing?
Well, I think it's time for them to take a step back, reflect on what they've learned today, and, put together their own action plan.
Sounds like a solid approach.
All right, so let's get into some actionable steps that folks can take right now, to dive into ground lease investing.
Absolutely. It's all about starting where you are, right? So what's the first step you'd recommend?
Well, a great first step is to familiarize yourself with the concept of ground leases. There are some really good resources out there. I'd suggest checking out a few books on the topic. The Complete Guide to Ground Leases is a solid start. It's pretty straightforward and covers the basics.
That sounds useful. And what about podcasts or online courses?
Oh, definitely. You can find podcasts like Bigger Pockets Podcast, which often touches on commercial real estate, including ground leases. They have a wealth of information, and the discussions are pretty engaging.
Nice. It's always good to hear different perspectives. What about practical tools or apps?
Right. There are some fantastic tools you can use. For instance, Zillow is great for researching property values and trends in your area. And if you're looking to crunch some numbers, the Bigger Pockets calculator is super handy for analyzing potential deals, including ground leases.
That's really practical. I love how accessible these tools make investing. What else can people do?
You might want to check out Deal Check. It's another app that helps you evaluate real estate investments. It's user-friendly and gives you a comprehensive view of potential cash flow and ROI.
That's awesome. So knowing these tools, what should someone do with them?
I'd recommend starting with a simple habit, like analyzing one deal per week. Just pick a ground lease property, run the numbers, and see if it makes sense. It's a great way to build your analytical skills without feeling overwhelmed.
That's a great tip. It's all about consistency, right?
Exactly. And don't forget to join a local real estate meetup group. It's an excellent way to connect with like-minded individuals and learn from their experiences. Networking can really open doors.
I can see how building those connections would be valuable, especially in real estate.
For sure. If you prefer online communities, platforms like Bigger Pockets have forums where you can ask questions and share insights. It's a really supportive environment.
What if someone feels a bit lost or unsure about where to start?
That's totally normal. I'd suggest starting with your local MLS access if you can get it. Familiarize yourself with the listings and trends in your area. Just getting a feel for what's out there can be super enlightening.
So it's about becoming more informed and comfortable with the market.
Absolutely. And if you're ready to take it a step further, consider talking to a local real estate advisor or mentor. Having someone with experience can really boost your confidence.
That's a fantastic point. It's like having a guide on your journey.
Right. And don't forget about using Rentometer for rental data. It's a great tool to compare rental rates in your area and get a sense of what you could potentially earn.
That's a smart way to start thinking about potential income. Are there any other habits or routines you'd recommend?
Sure. You could set aside a specific time each week for research. Maybe Sunday afternoons? Make it a ritual to dive into ground lease opportunities. The more you engage with the material, the more comfortable you'll become.
I love that idea. It makes it feel manageable.
And if you can, try to visit some local ground lease properties. Just seeing them in person can provide insights you won't get from just looking online.
That's a great suggestion. There's nothing like first-hand experience to really understand what you're getting into.
Exactly. And as you do all this, keep a journal of your findings. Reflecting on your journey can help you track your progress and clarify your thoughts.
That's a nice touch. It keeps you motivated and helps you see how far you've come.
Right. So with these tools in your pocket, you're ready to move forward. Just take it step by step, and remember, every expert was once a beginner.
It's all about taking that first step and being consistent. With all this knowledge and these resources, I'm excited for our listeners to dive in.
Absolutely. So let's bring this all together. Well, Sarah, it's been quite a journey exploring ground lease investing today.
Absolutely, Mike. I think some of the key takeaways really stand out, don't you?
Yeah, for sure. First off, the idea of ground leases being a solid passive income stream, that's huge. It allows investors to generate income without the headaches of property management.
Right. And the long-term stability they offer is also a big plus. I mean, having a reliable source of cash flow over time can really help build that wealth, especially for those of us over 40.
Exactly. And let's not forget about the potential for appreciation. Ground leases can provide that nice balance of consistent income with the added benefit of property value increases, which is really appealing.
Oh, and we touched on the flexibility they offer too. You can structure these deals in various ways, which can be tailored to fit different investment goals.
Definitely. And I think it's also important to remember the lower barriers to entry compared to traditional real estate investments.
Yes! So many options to consider, right? It just goes to show you that real estate investing doesn't have to be a daunting task. It can be a path to freedom and financial security.
Well said. For anyone listening, if you're over 40 and thinking about building wealth through real estate, remember that it's totally possible.
And if you found today's discussion helpful, we'd love for you to like this episode, subscribe to our channel, and share your biggest takeaway or any questions in the comments.
Yeah. And if you know someone who's looking to invest in property, share this with them. It could really make a difference.
And don't forget, next time we'll dive into opportunity zones and explore those tax advantages coming in 2026.
That's going to be an exciting topic.
For sure. Thanks for joining us today, everyone.
Take care and happy investing.